You know what separates the people who make it big in crypto from the ones who lose everything? It's not luck, it's not timing, and it's definitely not some secret insider group. It's discipline. It's following a few core rules that most investors ignore. And today, I'm breaking down the 5 rules every smart crypto investor follows. The ones that quietly build wealth while everyone else chases hype. So sit back, because by the end of this video, you'll know exactly how to think, act, and invest like a long-term crypto winner. Rule number 1. Never invest in what you don't understand. This might sound simple, but it's the most broken rule in the entire crypto space. People hear about a new project on X or Reddit. They see a 100-time story, and they jump in without understanding what they're actually buying. But smart investors, they slow down. They ask, what problem does this project solve? Who's building it? And is the technology real or just marketing fluff? Think of Warren Buffett's famous rule: never invest in a business you don't understand. The same logic applies to crypto. Before you put a single dollar in, learn how the blockchain works, how tokenomics affect price, and whether the project has real adoption potential. Here's the reality. If you can't explain a coin in one clear sentence, you probably shouldn't own it. Rule number 2. Time in the market beats timing the market. Everyone wants to be the genius who buys the bottom and sells the top. But nobody, and I mean nobody, does it consistently. Smart crypto investors understand that success isn't about perfect timing. It's about time. How long you stay in quality assets. Look at Bitcoin's history. Over every 4-year cycle, Bitcoin has rewarded patience. The people who tried to trade every top and bottom usually lost more than they gained, but those who just held through volatility built life-changing wealth. Remember this: volatility is the price you pay for crypto's upside. When you zoom out, the noise fades, and the long-term trend becomes obvious. That's why smart investors use dollar-cost averaging, investing a fixed amount regularly, regardless of price. Over time, it evens out the highs and lows and compounds your growth quietly, in the background. Rule number 3. Diversify but don't overdo it. Smart investors know how to balance risk and reward. They don't go all in on one coin, no matter how promising it sounds. At the same time, they don't spread themselves across 50 random tokens either. The goal is smart diversification. That means a solid foundation, maybe 40 to 50% in Bitcoin, the most battle-tested asset in the space, then a smaller slice in Ethereum, which powers the smart contract ecosystem, and finally a few select altcoins, projects with strong fundamentals, real use cases, and active communities. The key is to know why each coin is in your portfolio. If you can't name that reason instantly, you probably own too many. Diversification protects you from single project failure, but focus helps your winners actually make an impact. Rule number 4. Protect your assets like your life depends on it. Because honestly, in crypto, it does. We've all seen the headlines: exchanges hacked, wallets drained, people losing entire fortunes overnight. And 9 times out of 10, it's because they ignored basic security. Smart investors live by one phrase: not your keys, not your coins. That means they store their crypto safely in hardware wallets like Ledger or Trezor instead of leaving everything on exchanges. They use two-factor authentication, unique passwords, and cold storage for long-term holdings. They're careful with what they click. They double-check URLs, and they never share seed phrases. Ever. Because here's the truth. In crypto, your money is your responsibility. There's no customer support, no chargebacks, no forgot password. Security isn't optional. It's the foundation that keeps your wealth safe. Rule number 5. Emotion is the enemy of profit. Crypto is emotional. It moves fast, the charts are wild, and everyone online acts like they're making millions. But the smartest investors, they've trained themselves to stay calm while everyone else panics. They don't FOMO into green candles. They don't sell everything when the market dips. They stick to their plan. They understand that emotions destroy returns faster than bad luck ever could. Every crash, every correction, every bit of fear, that's where the best opportunities hide. The people who can keep their heads when everyone else is losing theirs, those are the ones who end up rich. Remember, the crypto market rewards discipline, not emotion. So next time you feel FOMO creeping in, remind yourself, wealth isn't built overnight. It's built by holding strong through storms. Now here's the bonus truth smart investors know, something that ties all 5 rules together. Crypto isn't a get-rich-quick scheme. It's a long-term technological revolution. The people who win aren't the ones who gamble. They're the ones who prepare. They learn, they protect, they wait, and they let time, patience, and innovation work for them. If you follow these 5 rules, understand before you invest, focus on time in the market, diversify wisely, protect your assets, and control your emotions, you're already ahead of 95% of people chasing hype on social media. Crypto rewards conviction and consistency. And if you stay disciplined, one day you'll look back and realize you didn't just survive the chaos, you mastered it. This is CryptoLytix, helping you move smarter, not faster, in the world of digital finance. If you got value from this, make sure to hit like, subscribe, and drop a comment below. Tell me which rule hit hardest for you. Because remember, smart investors don't follow hype, they follow principles. And that's how ordinary people become extraordinary in crypto.